Welcome back. A major milestone for the price of gasoline. The national average for regular gas now below $3 a gallon. It's the first time that's happened in 4 years. Phil Flynn is at the CME Group right now. Phil, what are you seeing in terms of trading this morning? How much lower can prices go?
Well, according to the futures market, a lot lower. I mean, if you look at what's happened in gasoline prices the last couple of days, the RBOB futures are near the low, and they look to go lower. And I'll tell you what, you would think that the party in power would be getting some credit for these low gasoline prices. But if you look at the poll, that is not happening, mainly because President Obama, of course, has been the anti-oil president, and it's been oil production that has driven these prices lower. If you take a look at the futures overnight on oil, they've turned back lower again. They're pushing towards that $80 a barrel area. Part of that, of course, is because of the weak manufacturing data that came out of China overnight. So really, it's the best of both worlds for the drivers around the country. They're going to see more money in their pocket, and it's more than likely not only are we going to see prices go below $3 a gallon, there is a good possibility they could fall below $2.75 in the very near future. No signs this is going to stop anytime soon. Now, the other thing, of course, is the U.S. driver, they're more fuel efficient than they ever have been before, and that's been another positive along with the rising oil production.
All right, Phil, thank you. We'll be watching Phil Flynn at the CME Group today. Jason Trennert is back with me. Well, you know, you have to believe the U.S.'s relationships around the world change quite a bit as oil prices go down.
Yeah, I mean, geopolitically, it's an interesting kind of chess game now, right? Because also Saudi Arabia's behavior in all this has been interesting to the extent to which they're kind of, looks like they're going for market share, right? Yeah. They've been accepting the lower prices. At the very least, though, you have to say this is just an unalloyed positive, obviously, for the U.S. economy.
Absolutely.
So you have a lot of things going on at the same time. The employment picture is getting better. Oil prices are coming down, and financial assets, stock and bond prices are going up. So, you know, it should make for a pretty merry Christmas, I would think. I think, you know, Christmas sales, holiday sales will be quite good. But energy prices, I would say also to the extent to which people feel they're permanent, there's a very strong tendency to spend those savings pretty quickly, right? Yeah. So if people think that it's a permanent change, I think the propensity to consume the savings will be high.
And it's a cycle, because if you see people spending more money, that helps the economy and the backdrop for this market. You coined the phrase, Tina, there is no alternative. You still believe there is no alternative for stocks?
I think in a world in which you have, let's say if you're buying a 10-year piece of German paper right now, a 10-year bond, you'd be getting, I think, 80 basis points. You'd be getting less than 1%.
Wow.
You're getting negative real interest rates. In a world in which you're getting close to negative real interest rates, there really are very few alternatives other than stocks if you have certain actuarial assumptions that you have to meet. So if you're a pension endowment foundation, some of them have actuarial assumptions that are 7.5%. I don't know what you do in a world in which the AAA rated security is yielding, you know, 10-year treasuries are yielding 2.30 or something. So yeah. I still think that's the only reasonable alternative.
Particularly
right
when you have companies paying dividends and growing earnings.
You know, well, I mean, you have right now, we looked this morning, there are over 160 companies in the S&P 500 that are paying dividends higher than the 10-year Treasury yield. So you know, it's almost, I don't want to say it's a freebie, but I mean, if you have a long-term time horizon, you're getting a higher yield than the AAA rated security, and you have the potential for growth. And a lot of them aren't really trading at particularly high multiples. So it's a very, very compelling reason. I know people are nervous because the market's moved up so much over such a long period of time. But you can see how these, a lot of these corrections, they don't last very long because, in my view, people recognize that it's one of the only games in town.
Right, and that's what we're seeing. This market continue to trade at new highs. But what about the Federal Reserve ending quantitative easing last week? So now we know that QE, that bond buying program, is no longer there. Right. When do rates start creeping up, actually creating some competition for stocks?
I think you've got to. Usually, if you look at the models, people don't really see a lot of competition, or stocks don't see a lot of competition from bonds until yields are well above 4%, close to 5%. So I think we have a long time. And I would also just caution to say that the Fed, while they're going to stop adding to the size of the balance sheet, they're also pretty far away from actually decreasing the size of the balance sheet, which is another way of saying they're still going to be pretty easy, pretty accommodative. It's just that they're not going to be as accommodative as they were.
Right. Just because they're not buying the bonds doesn't mean that they're not holding them. They're holding them on their balance sheet.
That's exactly the point. And so that I would think, now, the interesting thing, too, is that the other central banks around the world, as we saw, like Bank of Japan, and the big question mark is going for it. Other central banks are going for it. The big question mark is the ECB, is the European Central Bank, and to see when they might blink to actually ease as aggressively as the other central banks around the world. world.
Yeah, well, you're really dealing with different places. All these central banks are at the same time. BOJ, we got to talk about the Bank of Japan and what happened last week. Jason, stay with us. We got a lot to talk about with you this morning. We're just about 10 minutes away from the